Welcome back to Closing Bell, and today I want to share exciting news. I'm sure you're excited as well. Tech investors, growth investors, it sounds like, it looks like, it feels like we are back, okay? Looks like things are recovered after Jerome Powell's announcement about inflation, interest rate not rising. What is going on? So today I want to clear all this up with my own findings, not that nonsense garbage you see on CNBC which just swings up and down like a bipolar effect on a daily basis. So tech stocks are back. Nvidia all-time high. I hold it. If you guys hold it, give a woot woot in the comment below. Hashtag Nvidia. Jeffries has upgraded it to 840. Nvidia is over 750 all-time high just now. Even better, the ARM deal might be going through. Now you can see that Nvidia, Jensen Huang says, I'm going to be investing $100 million in a supercomputer chip in UK. So it looks like they might be enticing the deal, trying to build some relationship. If it gets delayed, fine, but as long as they're still in the game. Next, AMD, also great news now, rocketing 5%, going beyond the 85. Who cares about the head and shoulder? It is just reversing it just now. Teaming up with Google with the new data super center, and also because of the product cycle on data center chips, AMD is coming in, cheaper, faster, stronger. Obviously, we still got the Nvidia counterpart, but they have signed a long-term deal and they will be supplying plenty of data center chips on a new generation one to Google. Okay, so seriously, what is that huge contradiction with inflation? Remember all the news that CNBC has been telling us? Inflation is coming up, interest rates are rising. Fed comes out saying, yes, inflation is going up. We admit it. We're going to pull back our interest rates to the end of 2023 instead of 24. That's like 18 months away. And now you've seen oil drop, gold drop, defensive value stocks drop. What is going on here? What's the thesis changing? So I just want to explain nicely to everyone on what's going on. Fund managers are stupid, okay? Institution fund managers are stupid. They always like to look at the back history and see what's happened by textbook and then apply what's going to happen. They look back at 2013. 2013, the same case happened. Interest rates were rising. The Fed started tapering, meaning stop buying bonds, start releasing, and then you see value stocks shooting up. Value stocks. That was when Warren Buffett became a $42 billion man. 5 years later, he became the $84 billion man. He doubled as well because he was buying lots of dividend, value, bank, and those type of stocks, oil, those what made him rich. So everybody follows textbook, but things change. Fund managers are dumb, okay? If they're smart, we'll be making money, not even investing in stocks just like you and me here, okay? So what has really changed? Oil drop, gold drop. Think about it. For me, looking at ground level, the COVID-19 is still here. They said the COVID-19 is the lowest risk. They've actually wiped it off in inflation. But think about it. Looking around myself, the COVID cases are re-rising again. Death rate is not going up, so great. Vaccine is working. But the spread is even more contagious. And guess what? The Euros is happening, the Olympics is happening, the Copa America is happening, people are traveling, people are starting moving. And the government is starting to show signs of cracks. Meaning, bed space in hospitals are still fine. But we are looking at potential a lockdown extension for unlocking down. Boris Johnson said we're not opening up yet. We're just going to hold it after later towards the end of summer. People's holiday are cancelled. You know, pubs, concerts, they're all being cancelled. How can this smaller company survive for another 6 to 7 weeks without opening up sooner? How are they going to survive? Guess what? The government's going to print more money. The government's going to print more, support more. Workforce is hard to get in. So the issue is going on that this value stocks, that this great value stock that's supposed to be up for recovery might have to delay longer. And if they delay longer, government have to sponsor and support. So they need to recover. But growth stocks do not need to recover. You have seen the earnings. You have seen how Google, Facebook, Adobe, Amazon, all these tech stocks, Zoom have been doing well during this pandemic. And the earnings at Q1, Q4 were doing well. Q2 expected to do well. And then now we've got Q3 and Q4 coming up. Will they do well? Of course they will do well. We're not spending, but the world around us has changed. So I still feel bullish about growth stocks. I'm not surprised if in the next couple of weeks growth stocks falls again. So take this opportunity to hold, to buy good, great quality companies. So what do we do then? What do we retail investors do? Do like what I've been doing the last few weeks. Chill. I've been watching the football. Just chill, do nothing. Look, seriously, you don't have to do much. Just buy good quality stocks, dollar cost average, and all you have to do is the 80-20 rule, where you spend 20% of your time investing and then you make your returns 80% of the other time on the other side. You don't have to do it the other way around. Just chill, because you and me retail investors, all we focus is to make money, save money, invest, and then spend time with our family. Okay, so do nothing. And lastly, I just want to say, like I said, always emphasize on the 80-20 rule. So, you know, we being in the UK, we thought that we were gonna spring out open and go travel, take airlines, but no, it seems like things are not as it seems. So mental health is what I want to focus on. I'm still here, stuck here working, families are stuck at home, everyone is healthy, everyone's fine. It's all good. You know, it's not normal that we can go and party and have barbecues at friends' place because the rules are on lockdown. It's still very uncertain and we're very not confident. So just watch for each other's mental health, your friends, your family. Make sure you give someone a pat on the back, a hug, a virtual hug if you can't see them yet. So mental health is an issue because we are trying to come up. Anxiety will be an issue opening up. So if there's someone in the family that needs to speak to, pick up the phone. Like me, I've been calling my dad at random times just to wind him up because I've not seen him for 2.5 years. I've called him yesterday, just wind him up, make voices, prank calls, just to keep things going. I think mental health is one of the biggest fear factor of 2021, 2022. Not your stocks, not your money, not inflation. I think we have to take good care of ourselves, take good care of family. Up here first before we can protect ourselves in our heart. Okay, thank you very much. I hope you enjoyed this closing bell. Hope to see you more in the future. Take care. Bye.
I hope you enjoyed that video. If you want to see future videos, please subscribe to the channel and press the bell button. Ding dong! More videos. Bye!